Today, we're going to dive into some key updates from one of the most impactful legislative changes in recent years, the One Big Beautiful Bill that was signed into law on July 4th, 2025. So my goal today is very simple. We want to help you understand, some key changes that have occurred and what steps you might consider next to help keep your financial plan on track. So first and foremost, let's talk about the taxes and the tax planning that have gone into this bill. The OBB builds on the 2017 Tax Cuts and Jobs Act by making its individual tax rates permanent. That means that your federal income tax brackets are not going to be changing every year, which is great because it gives you a solid, predictable foundation for the planning ahead. For 2025, federal income tax brackets will range from 10% on the low end for single filers that earn up to $11,925, all the way on the high end to 37% for incomes over $626,350. Married couples filing jointly, they follow a very similar structure, with the top tax rate applying to incomes above $751,600. So this permanence in the bill eliminates the uncertainty that was surrounding the 2026 expiration, which was fast approaching, and this provides predictability, which is a very, very powerful planning tool for us and our clients. However, with good news, there's always some downside. High earners benefit from this clarity, but there's a catch. Itemized deductions are now capped at a 35% tax benefit. So if you are a high earner in the higher income tax brackets, this could actually increase your tax liability. So this is something we would want to model with you very carefully if it does apply. So if it applies, please let's talk about it and see how this might actually affect your future income tax returns. Next, we want to touch on the standard deduction. Good news is this is something that's increased, and this potentially will help simplify tax filings over the next several years for many people. So the standard deduction for single filers now is $15,750. For married couples filing jointly, it's $31,500. And for heads of households, it is $23,625. And if you're a senior that is age 65 or older, there's even more good news. Another benefit that was just added in this bill, it is a new $6,000 deduction per eligible individual, and it goes through 2028. So for a couple where both individuals are 65 and over, you could potentially benefit from an extra $12,000 in income tax deductions. This is the provision that was added, kind of to offset some additional Social Security income. So I know there was a lot of talk about taxation of Social Security income, but this is where they added that deduction kind of, to offset some of that income. So if you're somebody who typically itemizes, it's very worthwhile to potentially reevaluate, because this boost in the standard deduction might offer a better outcome for you. Another change that you may have heard about and it's generated a lot of interest is the recent SALT deduction relief. So SALT stands for state and local tax. This cap has jumped from $10,000 all the way up to $40,000. Now there are phase outs in that cap. So for incomes beginning at $500,000 in modified adjusted gross income for single filers and actually married filers filing jointly, that same income limit applies on that phase out. But for married filing separately, the income phase outs begin at $250,000. So for people whose incomes are above that threshold, that deduction decreases by 30% of the excess, but keep in mind the deduction will never go below the original $10,000 minimum. Okay, now let's switch hats here and let's go to the investment side of things. And some new things we want to talk about. So let's talk about Roth conversions and capital gains. Thanks to these new permanent tax brackets, 2025 is a great year to consider potentially converting taxable retirement accounts into a Roth IRA. I know this is something we've touched on in past years with many people, but again, something to look at here. By paying taxes at today's rates, you have the potential to enjoy tax-free growth and withdrawals later in life. And this is especially valuable if you expect to be in a higher tax bracket at some point down the road. Long-term capital gains rates, the good news is they remain the same for now, but this is something we need to watch out for because there has been some talk in Washington about potential future hikes for high earners. So this is something we are watching closely, and if there's any changes that are made there, we will be sure to keep you informed. Okay, now let's look ahead to charitable giving. We have a lot of clients who are charitably inclined, and so this is something you want to pay attention to. So starting in 2026, they added something new where you'll be able to deduct charitable contributions as an above-the-line deduction, even if you don't itemize. So, maybe for people who make some small gifts here and there but don't itemize, there is a new $1,000 deduction for single filers and $2,000 deduction for married couples. So please, if you make those kind of donations, please be sure to keep your receipts because it's something that will provide a little bit of tax benefit for you. This does make donating even more tax efficient. And if you're a qualifying senior, this is something we can also explore in looking at how this goes in conjunction with potentially a qualified charitable distribution. So that could help stretch your savings, even further and help the charities that you want to help. Lastly, we want to touch on estate planning. So this OBB introduced a big game changer here. The OBB set permanent estate tax exemption. So again, more predictability. This is what we've been kind of hoping for. For 2025, the threshold for estate exemptions is $13.99 million per individual or $27.98 million for married couples. So this is going to take out estate taxes, the concerns of potential estate taxes for the vast majority of this country. So that's good news. The top estate tax will remain at 40%, but with these exemptions locked in, now you can plan with a lot more long-term confidence. One thing to keep in mind is we're talking about all this being permanent, right? So this is always subject to future legislative changes. So when we say permanent, we mean there's no sunset on these tax rates and things like that. But please keep in mind, future Congresses could come in and make changes to these bills. Okay, so in summary, what does all this mean for you? OBB presents some new opportunities, and there are some challenges in there, but a lot of great opportunities. As your financial partner, we are here to help guide you through it all. So if you have any questions, please let's schedule a time and figure out how these updates impact your personal plan. Together, we'll keep your strategy ahead of the curve and your financial future bright. Thank you for trusting us at McGee Wealth Management. And as always, we appreciate you working with us.